All right, that's the macro. Let's talk the earnings. Jenny Horne here with us as well. Look, SuperMicro's been the really fun one, but I think we start with AMD on a morning like this because that's the one that's in the broad indexes that people are trading. It's rolling the S&P 500, and it's down, and it doesn't look like it's anywhere even close to NVIDIA, despite everybody saying they're number two.
You know, I always have said that it's going to be a really difficult thing for them to regain this competitive edge that they've lost, I feel like, for the better part of the last 2 years now. I mean, I know that they've been more of a growth story over the long term, but yeah, it doesn't seem like they're in much better shape than what we were seeing based on a year ago. I mean, that's a little concerning. Their PC and data center revenues, though, did help rise more than 80% on a year-over-year basis. The growth was led by these, of course, the 300 AI chips, which their CEO did call the fastest ramping product in their history. However, I would say that what seems to be the focus of a lot of the selling today is guidance. I mean, that was something that was hugely disappointing, and that's due to a lot of the weakness they saw actually in their video game segment, which they said was considerably weaker than they'd been expecting. So they do anticipate now second quarter revenue to reach around 5.7 billion, plus or minus around 300 million. At the midpoint, that would amount to approximately around 3.5% higher than on a sequential basis and about 5.5% higher than last year. But overall revenue, we did see a nice sequential rise. It was down on a year-over-year basis. So where's the growth there? If we're basically trading, or we were trading on the expectation that this name's going to be a second player to NVIDIA, you have to be able to post growth.
They're still waiting a quarter to get it. I mean, squeezing by with single-digit growth and then telling us that the next 2 quarters, you know, we're going to eventually get to double digits by next year. It's like, it's pretty crazy that this is even in the same category of NVIDIA, which is posting hundreds of % already in the last couple of quarters. So it's just a reality check that for many of these companies, AI is a very positive force, but it's basically offsetting a lot of cyclical weakness. So AMD is like a company divided here in half that's basically going in place until a couple quarters from now. But then the stock's up 60%, you know, or whatever. So SuperMicro is more kind of a pure AI play. What's the problem there? How come the market's punishing them too?
So the problem with SuperMicro, who has risen, 200% plus this year, has seen third quarter revenue miss expectations, and there's some questions over the profitability of their new line of servers. But I think what was interesting is a theme for both of these names, and I think part of the reason SuperMicro is falling 11% this morning is they both mentioned that they're seeing supply chain right now hamper some of their growth efforts. So SuperMicro is basically like, well, we do see this massive demand, and we're definitely trying to meet that massive demand. We don't have the supply chain available, and I think the street's realizing this morning that's going to be expensive to build out supply chain. And we've since said NVIDIA has a mastery on the supply chain. They've basically reinvented the wheel, but that doesn't mean that that's the case for all of these names. I mean, stepping back, the good thing about AMD is they already have a massive customer base, but when it comes to SuperMicro, I mean, this name has been trading on a lot of the expectation for AI, where it's going to serve in all of these various companies that are pouring money into AI. But they mentioned supply chain a few times on their call, and I think that if you're a company that's risen this substantially this year, you would get punished for a lot less. I mean, frankly, neither of these earnings calls were overwhelmingly optimistic.
A preferable problem for SuperMicro, though, when you've got booming growth that you're having trouble meeting demand.
Right.
But to your point, the stock's just gone ballistic.
It has. Like, it could be what we're seeing with Tesla, where we're worried that there's no demand, but there could be supply.
Yeah, that's a worse problem.
It's definitely a worse problem, but I think that building out the supply chain necessary to meet this demand is going to be a more long-term story, and we were trading as if it was happening tomorrow. Well,
the other thing, too, is that I think the implication, because SuperMicro, what did surprise pretty well here were some of the margins and their profitability in this, but if they're going to have to spend to then meet all this demand, some of that might wane a little bit. So, look, it's just basically a stock that went 10x in a year that's doing great demand-wise and only really has a valuation problem. But then you look at the backdrop, which has changed with interest rates blowing out, and you kind of see the connection here, where suddenly it's worth taking a look at that valuation and maybe reassessing given the things that have changed in the backdrop. Thanks, Jenny, for the numbers. Very good setup here for SuperMicro, and AMD must be watched to see if the dips get bought. Recent favorites, when they get hit, always a test to see where risk appetite stands.